Buy or sell Twilio. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So we can find it under the theme Flexible Workforce. Average 30% from the 52-week low, which is beating the S&P 500, but we have seen a spectacular sell-off. So here is Twilio. It's a communication API. That's what they offer. It's at 52-week lows, and we have seen a minus 53% pullback. So the bears have been brutal, not taking any prisoners, but let's see whether there are some opportunities here. So yeah, this is the company's website, Intelligent Customer Engagement at Scale. Twilio powers personalized, super important word, interactions and trusted global communications to connect with you with customers. Yeah, so transform your customer experience, support any channel with one platform, treat every customer like a VIP, say goodbye to one-size-fits-all messaging. I'm definitely very bullish on the personalization aspects to their business. I think that personalization is definitively the future. Okay, so here's the chart, big picture, weekly data points. So I did find these huge time cycles, rise, decline, rise, and there is the potentiality that the declining phase will actually extend here into May, which means that there would be significantly more downside if we do measure how long the rally was. So from that level to this high, that was 336 days. If we measure now the duration of the sell-off, so far we have had a precisely 336-day sell-off. So even though the bears certainly are still in control, there might be some interesting opportunities here from a more bullish perspective. Whenever you look at the chart, you have two options. You can either be bullish or you can be bearish, and then it becomes a question of risk reward. We have already seen a very substantial sell-off here. That does not mean that there's not more downside, but there's also dangers with being short a stock that already has seen a very substantial pullback, and that is due to how percentages work. As a short seller, you do have theoretically infinite risk, and the way the percentages work is that when you rally from a low level, the move can very quickly become big. So there is risk also to being there. It's safer, quote unquote, to short a stock that is towards its highs than it is to short a stock that is towards its lows. Basically due to how percentages work. Currently, we do not have any support level. On the daily data points, the same message, we do not have support. So the bears are very much in control. What is, however, interesting is when we look at these other indicators. So MACD is just complete collapse there. RSI in particular, and also the PPO, the distance from the 20, 50, and 100-week moving average, it's at levels that previously has formed lows. Okay, so let's zoom a bit back here. So you see this is the current RSI level, and you see the previous time we had this RSI level, it was back here, and that was a very good time to buy Twilio. And in that instance, you also had these very low levels on the PPOs. So that's interesting. So that another time where we had a low RSI, but not as low as now, that is back here, that did result in a rally. And when we go further back and we look at this RSI level, that is here, which also formed a key low for Twilio. So based on the history here, buying the low end of RSI and the PPOs, it does have a pretty good track record of working out for the bulls. So now we go to the daily data points. So here we are at a very low end of RSI and also the PPOs. The previous times we had these low levels, you see back here, we did at least get the bounce. Here we got a bounce. Here we got a bounce, but we did have a more extended sell-off after that bounce. So I think that the odds here, based on the price history of the security, it certainly favors either that we have a key longer term low for Twilio, or at least that we should expect a bounce. That is what the data does suggest. The data here does not support putting on a short position on Twilio, notwithstanding that the bears are currently in control. The history here was pretty darn clear. The previous times we've had these readings, it's not been favorable for shorts. When we go to the seasonality, it becomes even more interesting from a more bullish perspective. So over the last 5 years, January and February have been some of the strongest months, averaged 10% gain in both January and February. Over the last 7 years, we have a similar message. January and February are strong. December seasonally tends to be very good for bears, but these months ahead of us, and including the current, not good for bears historically. Here is Finviz. We don't have any real, well, we have this diagonal descending support line here. Performance over the last year is obviously atrocious. So yeah, the bears have definitively been doing some damage. SAGS has a number 3 hold, F value, F growth, but we do have a momentum. Industry rank bottom 35%. Industry is internet software. No dividend, market cap $38 billion US. When we look at insider activity. Okay, so we do have sell, 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 but then we have accumulation like buy, buy, buy. So far this year we have 4 sells and 3 buys. So it's a bit messy as such. So yeah. When we look, okay, so here is, we can get some consensus estimates here from Market Scanner, some price targets. So there's 30 analysts covering the stock, so pretty, nice number there. So the average price target is 90% above the current stock price. Highest is 156% above, and the lowest is 30% above. So the price targets are definitively bullish. Then we jump into the correlations. So this is long-term correlations. Then we do have 81% here with the S&P 500. 89% here with the communication services ETF, WOX. This is Zoom, but we don't have any long-term data. Minus 87% negative here with the dollar index. Daily data points. 72% here with the S&P 500. 80% WOX. 91% Zoom. So Zoom and Twilio definitively trade together to a significant extent. Minus 78% here with the dollar index. So because of the strong correlation with VOX, I think that we might look a bit at what's happening with VOX. Because what happens with the communication services ETF, it could have an effect on Twilio. Okay. So when we look at it here, you do see that we have a bit of a topish pattern here for this ETF, a rounding top. That's not ideal. Looking at the daily data points, we have seen this pullback. Seems like some horizontal support levels are, but the bulls are trying to use these horizontal support levels here for support because they don't have any like moving averages here to lean on, because we lost here a bunch of moving averages. We got the death cross here, so there definitely is some momentum here to the downside. So to sum up, okay, my take on Twilio. I think the technical message is pretty clear. There's far more reasons to be bullish than bearish. Seasonality is bullish. The fundamentals are also very much bullish. The only kind of weakish thing is that, well, the SAGS ratings was not good, and also the insiders are very undecided. But I think that if we take it all together, I think there's more reasons to be bullish than bearish on Twilio. But we obviously need to just respect the trend, we don't have enough, most do not have accounts that are big enough to actually fight the market. You need a huge account to, be the one that shapes bottoms in securities.